Phil Pustiowski here. I want to talk to you about how to get your real estate deals funded. Now, this topic is actually what I consider to be the most misunderstood topic in real estate investing. Why do I say that? Well, so many of us out there seem to have a false understanding of the role funding plays in real estate. Let me give you an example. The common notion is that if you had all the money in the world to buy real estate, all of your real estate problems would be solved. Would you consider that to be true? Just picture yourself. If you had all the money in the world to buy as much real estate as you wanted to buy, would that solve all of the problems that you have as far as real estate investing? Well, many people would say yes to that. But I challenge that, and here's why. Think back to a time in recent history when organizations, companies basically had unlimited money to throw at real estate. And you conjure up probably the images of the mid-2000s, right? You conjure up the images of all these large banks, securitizing and packaging up all these loans and selling them off, and then they were leveraging those packages, and they were leveraging those packages, and so you had just this unbelievable amount of money being thrown at real estate. And what happened? What happened when all that money, basically unlimited amounts of money, could buy as much real estate as they wanted to buy? What happened? There was an absolute real estate collapse, wasn't there? So the solution is not unlimited money. The solution, of course, is knowing which deals to fund and which ones not to. And furthermore, we're going to talk about here in this little training video the different types of funding sources and which roles they play in which types of deals. Okay, so assuming you have a good deal, right? You need good deals, because if you throw money at all real estate, you're going to end up the way that many organizations have ended up in the mid-2000s that went on to go belly up. Think of AIG, where they were insuring all of those securities, and they went under. They were one of the largest insurance companies at the time. Okay, so let's talk about funding options. All right, funding. There could be an unlimited amount of funding for any deal where you already have a buyer in place. That's where I'm going to start. I'm going to start with transactional funding, okay? Transactional. There's a number of different words to describe this. They call it cash in a flash, but really transactional funding is all about where you already have a buyer in place. Here's the example. Let's say, for example, you've negotiated with a seller and you've got them to agree to $100,000. They're going to sell their house to you for $100,000. Meanwhile, you have a buyer lined up who's willing to pay $110,000 or $120,000. Then in that case, you can employ transactional funding. And basically, transactional funding, if you're working with the right funding source, if you're part of our program, we have some terrific funding sources available on the transactional side. What they'll do is they will put in the $100,000, and then that's because you already have a new buyer who's paying $110,000 or $120,000. Now, what's securitizing their money is not the deal, but the fact that your new buyer is going to close. Does that make sense? So transactional funding is not based on you at all. You don't need your own cash or your own credit. You're not qualifying for a loan with transactional funding. But because what's being qualified is the new buyer who's buying the property, if that makes sense. This is a wonderful option, but it's not always an option. Why? Because you don't always have a buyer in place, right? If you always have a buyer in place, you can use transactional funding. And the funding amounts, they vary depending on the size of the deal, depending on how long you need the money. If you need the money for a day, it's usually a lot cheaper than if you need transactional funding for 15 or 30 days. And you also need to work with the right type of transactional funder. Some, they're not all created equal. Some will leave you high and dry on the closing table, which is a bad day. That's why our students rely on our sources, because we have some, because we fulfill on our promises. Okay. The next we're going to talk about is hard money. Hard money is used in situations where you want to close on the piece of real estate, and in most cases you want to fix it up and resell it. Hard money lenders are usually localized. There are nationwide hard money lenders, but those tend to come and go depending on the market conditions. And a hard money lender is going to lend you money based on the value of the property versus how much you're buying it for. So if the property you're buying is worth $100,000, if you can buy it for, say, $60,000, $55,000, or even less, you can usually get hard money on that deal. Again, that's not based on cash or credit. Hard money loans are strictly based on you getting the property cheap. But there's a big if, isn't there, with hard money? What's the big if? The big if is that you're going to get a deal for less than 65 cents on the dollar. Not that easy all the time to do. Okay, it's possible. We see it all the time, but consistently it's difficult to find a ton of deals where you can get that cheap. That's a pretty challenging piece of the puzzle. However, on the lower price properties, you start dealing below 100,000, those kind of deals, it's a little bit easier. You're dealing with $1 million homes. Try finding $1 million home you can buy for $650,000 or less. They're rare. Again, the size of the deal, as it gets lower and lower, it's easier to get the percentages you need for hard money. Moving right along, another option is going to be conventional. Now, this is what most people think of. They think of conventional financing, and that is where you actually go to a mortgage broker or a bank and you are going to borrow the money. Now, they're going to base their loan on your credit and your cash position and also what your income is. They're definitely, it's definitely qualifying for a loan. It's difficult. Conventional loans, especially now, investor loans, they're difficult. It depends on the time of the market, but usually it's difficult to get them. I mean, you really have to have a lot of income coming in. They love W-2 income, but for entrepreneurs like myself and maybe you, it's kind of hard to get a loan just because you don't have a standard JOB. So conventional is always an option, but it's usually one of the more difficult pieces of the puzzle. Another option is private money. And private money is you have either friend, family, maybe just somebody who wants to lend money out of maybe their IRA and they want to get better interest rates than they're doing in their current market. Maybe they've got their money in a money market or stocks. Private money can be a great option, but I got to caution you here. You only want to throw private money at a good deal. You see, if, again, let's go back to that example. If you had all the money in the world to buy real estate, it's not always the solution. So when you're using private money, make sure you use it wisely. It's not always that difficult to find it once you can show to people with, let's say they got an IRA of $200,000 or $500,000 IRA and they want to get a better rate of return. Let's say you can give them 8, 10, 12% rate of return because you're investing against real estate. You better be using that money wisely, because it's one thing to lose your own money. It's a totally other thing to lose somebody else's money. And this is not bank money necessarily. See, banks create their money out of thin air. I'm sure you know all about that. If you don't, just Google the truth about money. It's fascinating. But private money is real money. It's someone's real savings. And I don't care if they just sold the business and made $30 million and they're sitting on $30 million cash. That's still real money. Whereas conventional money is coming from banks, and banks create money out of thin air. So you've got to be very careful that you invest wisely with private money. All right, one more place where you can get funding for your deals, and that's actually from the seller or the deal. So I'm going to call it owner financing. Now, owner financing could be where you take over their payments. It could be where you are going to do a lease purchase. It could be where you're going to actually pay the owner. They're going to become the bank, maybe in the second position or even in the first position. Now, I'm throwing a lot at you here. That's okay. I'm just trying to give a quick summary of all this. But owner financing is another good option. And the thing that's nice about owner financing is most of the time owners don't have you qualify. They don't check your credit. They don't see how much cash you got. So this is an overview of the different funding sources you have available to you. And it's different for each particular deal, but there's one thing that's for sure. You want to do real estate deals that are good deals. Just because you can get the property with owner financing, maybe private money, and maybe you've got, if you can combine all these and you got, money for the deal, that doesn't necessarily mean it's a good deal. Okay, so that was the beginning of this video, and it's the end here. We're leaving you with this, and that is there's a lot of different sources for money for your deals. Okay, and if you can't find funding for your deal whatsoever, and you've tried all of these, then you may not have a good deal in your hands. And that's okay, because it's going to save you time and energy of working on a deal that you won't get paid on. But definitely folks in our coaching program have seen where when the deal is good, the funding sources are there. And if you've got a buyer in place, it doesn't matter how good the deal is, you can always go transactional funding if you've got a buyer for a higher price than what you've got it for. But the key is to work on good deals, because good deals will get you paid, it'll get paid the funders, and everybody will be happy. All right, hope you enjoyed this video on how to get the deal funded. See you soon.